morning, everyone. How are we? Hope we are well. Well. Oil, all of the drama, all of what went on yesterday. Oil prices went negative. Well, I'm going to put some clarity around that because, yes, they did, but it was actually a specific oil contract. I'm going to talk a little bit about that in a minute. But before we do that, let's just do what we normally do and have a quick check on where the main indices, starting with the S&P futures. Looking here, doing exactly what I was looking for it to do, which was come up and test that monthly 21, the blue moving average there. We literally kissed that, and you can see as a result, trading this week is down slightly. S&P is down off the back of that. So we've had that 50% plus retracement, and the market is reacting there. So you've seen that. Now, it's not quite the same in Europe. It has retraced, and it has retraced, I'll say, on the DAX, about a 50%, just slightly under. And as we know, the FTSE hasn't retraced that much. But what we're seeing now is we're seeing this stall. If I go back to the S&P and I pull it down to a daily chart, you can actually see this in more detail. So at the moment, we're not really going anywhere. We're drifting slightly up, but the markets are not making clear moves up or clear moves down at the moment. We're sat in this pocket. You know, we're hitting the daily 50 moving average, but we've also hit the as I said, the monthly 21. We're sitting in this little pocket. So for me, nothing has changed. It's really all about whether or not we come back from where we are. If we retest these lows, then I'll be looking at, as a minimum, the 2015 lows, which are down here, potentially further. So at the moment, if I go back to the monthly, what we're seeing is the same pattern that we saw back in 2008. It's just happening more quickly. So we're seeing the reaction to the crisis, a retest. It actually went slightly lower. Obviously, the volatility is much bigger here. Retested the low, come back up, retested the 21. So now I'm watching to see if we take those lows out, which is exactly what you saw here. I've been talking about this for weeks. Come back up, we've tested the 21, we came down, took those lows out and rolled over. So that's essentially what I am watching. And obviously the moves are greater, and as I've said over and over again, you hear the drama in the news. Well, it's fallen the furthest, the quickest. Well, yes, but it's also in relative terms to the previous move, and I've talked about this over and over again. Relative to the previous move, the drop was about a 30% of the last rally, 30-40%. And if I go back to where we are now, it's the same idea here. You can see that the drop, that move there, slightly greater, about 40% of the last rally. So the markets really are behaving in a similar way. Now, whether or not, if we take these lows out, we're going to come all the way down to this support like we did here and get a full retest of the previous lows, nobody knows, but that's what we're watching. So now we're going to go to oil, and I'm going to do a couple of things on oil because you may or may not have seen the news that said US oil prices turn negative. Now, a lot of people will read this in certain ways. They'll miss the US bit and they'll just see oil prices turn negative and then start thinking, does that mean I'm going to get free petrol, or does that mean petrol prices are going to go down, or whatever? It doesn't. You're missing or people that are thinking that way are missing the point. It's actually very specifically US oil prices. Okay, and the reason why is to keep things simple so you can understand the cause and effect. To keep things simple, oil is essentially priced three ways. So a barrel of oil is a barrel of oil. It costs X, but not everybody uses the same pricing mechanism. So if you imagine there are three key pricing mechanisms that are either traded or used and measured. You've got West Texas, WTI, which is how the US price it. You've got Brent, which is the one you usually probably hear on the news. It's how we price it in Europe. And then you've got NYMEX, which is another option. It's like a futures pricing mechanism. But all of these have futures contracts in them. So what that basically means is you've got the price of oil as a spot price, and then what people believe the price of oil will be worth 1 month from now, 2 months from now, 3 months from now. Now, essentially, the current month's contract was expiring or is expiring today. So that's the 21st. So the key thing to understand is that most oil contracts, even if the price, so let's say the price of WTI was $50 a barrel and Brent was 55 and NYMEX was 52, then if WTI, and I'm simplifying this, but it's so that you get an idea of the concept, if WTI's oil price went up from 50 to 55, keeping it very simple, oil prices are likely in Brent and NYMEX to go up as well. So the oil price in Brent, and I am simplifying this, may go from 55 to 60, and NYMEX would go from 52 to 57. So even though the price of that barrel is different, the price fluctuation tends to be the same regardless of what the contract is. It's not always exactly the same, but it tends to be the same. So as a general rule, if oil is going up in value, it's going up in value across the board. Now that is not 100% the case, but that can happen. So the reason yesterday was so different is because the contract that is about to expire, so this month's futures contract, is expiring today. And yesterday it went from, I think it was about $20 a barrel. It actually went down to minus 37. But if I pull my oil futures contract up, you'll notice that that doesn't actually show there. So you don't actually see it happen. So in fact, what it was that specific contract. So in the US, the challenge is there is obviously a massive oversupply, and that started with the price war between OPEC and Russia. There's been an oversupply as well. This time of year is notorious for that. And then you've got on top of that no planes flying, very few cars on the road. Basically, demand for oil, whether it's the US or anywhere in the world, has absolutely tanked. So if you've got an oversupply or a borderline oversupply, and as a result of that, you have a massive decrease in demand, essentially, the reason this contract had to drop is because the suppliers are literally running out of space to keep that oil. So they've essentially gone to the purchasers, we will pay you to take it off our hands. That's the simplified way of thinking. I'm not going to get into too much of the detail because as a trader, you don't need to know every element of detail. But as you can see, what's key here is not every futures contract and not every pricing mechanism was affected. However, at the moment, the supply for oil generally is high, demand is extremely low, so it may be that oil prices continue to come down and continue to roll over. We have some of our students at the moment, we were discussing this briefly in one of our Telegram groups. You guys were saying that we've got an area of support down here. Now, a lot of people are saying, well, oil will come back, and have asked me what I think. Now, I don't think oil prices will stay where they are. I think at some point, and again, look at what I'm saying here, I'm not committing usually, at some point I think we'll see oil prices get at least back to $40, $50 a barrel in this region here on my NYMEX chart. So at least a 50% retracement here, and possibly bearing in mind where we've been in the past, somewhere around this level here. So I think oil prices will go up as demand increases. I don't suddenly think we're all going to be at the end of this crisis going to electric cars. Oil prices and oil consumption will still be relatively high, and I think you'll see prices come up. But as and when that will happen, I don't know. We may still have further to fall. We've got airlines potentially going bust. We don't know how travel is going to look when we get back into this, how quickly we're going to be able to come out of lockdown. So to me, I wouldn't be surprised if oil prices continue to fall slightly, and whether we see next month's futures contract do the same. So I hope that makes sense. I hope you understand that there was one particular futures contract, so basically in the US, where supply has been notoriously high as well, because don't forget, they're one of the biggest oil producers in the world. Right, what else? Let's go and have a little look at currencies. Let's go and see what the euro is doing. Euro may just have, no, it's still tight, still hasn't come out of that consolidation that we've seen So again, same thing applies to me. I'm looking for a break of these lows, not to trade, but if they take those lows out, then I would be looking for my setups down at the 2015 lows. And what I'm going to do, I'm just going to go through some of the major pairs so you can see how small the trading range is. Obviously, trading volumes are very low at the moment. You can see there's pound against the US dollar, not really going anywhere. Then we look at US dollar, Canadian dollar. This is drifting up ever so slightly, but again, not really making any big moves at the moment. US dollar yen, see this here, again, very consolidatory. So a lot of these major pairs not doing a huge amount. And at the moment, not got a huge amount of trades. I've got a couple of trades that I am running short that are hovering around break even, and I've still got my US dollar, Singapore dollar trade. So not a lot happening trade-wise, but that doesn't mean as lockdown conditions change or certain things happen within the market that we won't see a pickup. But trading volumes are low. Remember, we are on lockdown. This is a very unique situation. So what I'm saying to a lot of the guys in our room and on our Telegram groups, and I'm actually going to be doing a session on this tonight, is this is a really good time to work on strategies, work on testing, work on all the things that you don't have time to do when you're busy trying to trade and trying to manage lots of other things as well.